Hi, John from York from Bay Financial Partners, looking at the investment markets. The US got a pretty big boost on the latest jobs numbers coming out. They came in at 528,000 jobs created in July versus expected at 258. So now that's the best level since February of early this year, and really does sort of throw a little bit of cold water on the talk about the US being in recession, because certainly on the sort of growth numbers, two negative quarters, that is sort of the technical definition of a recession. But with this number of jobs being created every month, it's close on 3 million jobs being created in the first half of this year. And that's not really consistent with a recession. Now, after the Fed increased interest rates at its last meeting by 0.75 of a point, it came out and said now they would go sort of on the sort of data that is sort of coming through, but also on a meeting by meeting basis. Now that's led some economists and analysts to then potentially look at the fact that we may have seen peak inflation, and indeed with the sort of commodity prices falling, especially oil and grains, that may well lead to a little bit of softening in the latest inflation data coming out later this week. Because certainly food prices in July were down around 8%. Oil is off nearly 25% over the last sort of 4 to 5 weeks. Now that's obviously having the implications in the interest rate market. The key sort of 10-year note, that's fallen down from a sort of 3.25 yield, currently trading around sort of 2.80. And indeed, more encouraging news. You're starting to see some grain shipments now leaving some of the Ukrainian ports. They have approximately 30 million tons of grain sitting there waiting to be exported. We've seen a few ships leave. There were a further 4 leave the other day, and that's really encouraging news. So now it's just going to be very interesting to see how it sort of plays through, because certainly the latest earnings reports have been pretty reasonable. Around sort of 70% of the companies reporting have beaten their estimates. Now some might argue that their estimates were pretty low after some pretty vicious sort of markdowns after the first quarter reporting. So that pretty big fall in oil prices, currently trading around 90 bucks a barrel. So it's just going to be interesting to see how it's sort of going to, if it can hold around those levels now for the next sort of 3 to 6 months. Because if it can, it does take quite a bit of inflationary pressure out of the global economy. Now in the UK, the Bank of England increased interest rates yet again, another half a point increase. That's taken the base rate there to 1.75, which is a level we haven't really seen in the UK since 2008. And indeed, all the time you've got rising inflation out there, and it's going to be interesting, like you say, with the sort of falling gas prices and oil prices, just to see if that does start to impact on those headline inflation numbers. Similar case in the EU region as well, although EU growth was slightly better than anticipated, and that's mainly, I think, due to sort of tourists coming back and spending money over the summer months. But obviously you've still got the ongoing issues for the Russian supply of gas and trying to wean themselves off that reliance on that Russian gas supply. because that will have some major implications for European industrials and productions. But also as well, obviously, for households as we sort of head into the winter months. So Australian equities are now up around 9% from the June lows. And again, it's just going to be interesting. They sort of opened up their borders. They're starting getting tourists through now, and they're starting to spend dollars. So that should be good and encouraging for the Australian economy. And despite the falling house prices, really to be expected as you start to see interest rates rise and obviously mortgage rates rise. Now here in New Zealand, it's sort of getting quite interesting now that the borders are open, starting to see migration numbers start to turn negative. You've got more people leaving New Zealand than are actually coming in. Now, obviously, that has some implications out there for growth because, before we're sort of looking at sort of growth coming through as you started to see more people coming into New Zealand. But now with people able to travel, you're seeing quite a few Kiwis leaving and going overseas to do their sort of big OEs. Which have obviously been put on hold for the last sort of couple of years because of COVID. Now, most analysts expect the Reserve Bank to again increase interest rates by another half point, taking the OCR up to 3%. Because certainly inflation is still pretty high here in New Zealand. But again, it'll be interesting to see if it does start to sort of peak and sort of fall off after you're seeing the fall in commodity prices, food prices, and also obviously energy. Now, on the latest opinion polls, there was some pretty bad news out there for the government, falling down to one of its lowest rankings for about 5 years. Indeed, on the current polls, National and ACT would be able to govern alone. Now, you haven't seen those sort of numbers, say, over the last sort of 5 years. Now, obviously, with the bounce back in equity markets, it's certainly good news out there for Kiwi savers as people are checking their accounts now. They're seeing a nice little bump up in those numbers. Now, if you are looking for income options, plenty of alternatives available out there. And go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.